Please come to our next chapter, institutions and intermediaries. So in this chapter we will see various institutions in the capital market and various intermediaries also. So one good thing is that there will be a lot of repetitions. We have covered in the first few chapters, like this depository you have already seen, custodian, BSC, NSC, NASDAQ, New York Stock Exchange. Okay, so like this. But something new will also come up. So repeated portion will quickly revise and the new portion we will study in detail. So first is, what is depository? Now it is a special topic on institution. So depository is an institution. And what do? They maintain the accounts of the demat holders, okay, where the securities are kept in a electronic form instead of physical form. So they are like, you can say, bank, but instead of keeping money in money, they keep the securities, okay, on behalf of the investors. So depository in simple terms means a place where securities are kept safely. Now depository nowadays is a very general term. It also is used in other context also. For example, there are depositories where now your school mark sheets can be stored, okay, and depositories where your Aadhaar card can be stored, and in future if you want to recover, you can recover it also. Is it right? So there is a concept of DG locker by government, which is like a depository. So you can keep all your documents there, license, Aadhaar card, PAN, they will verify, and you can use it for any transaction also, right? Whenever they want your iCard, and if you're not carrying the physical iCard, you can show it in the DG locker. So that is also like a depository. Depository of land records, okay. But in our syllabus, depository would mean the institution where the securities are kept in an electronic form. That means instead of keeping the physical share certificate, physical debenture certificate, you can keep it in the electronic form, and then it is kept with an institution called depository. So depository is an organization which keeps securities in electronic form and helps in the transfer of ownership of securities. So whenever you want to transfer it also, it's easy. If you want to sell, it will be reduced from your account. If you buy, it will be added to your account. So it works like a bank passbook only. It works like a bank passbook. When you deposit money in your bank passbook, what happens? Account is credited. When you withdraw money from your bank, it is debited. Now, depository is defined in Section 2E of Depository Act 1996, because during this period the demat trading in India started. After that National Stock Exchange, lot of innovations and reforms have taken place, and one of the biggest reforms was setting up of depositories, because it has really changed the rule of the game of share market trading. Depository means a company formed and registered under Companies Act 2013 and which has been granted a certificate of registration under Securities and Exchange Board of India Act 1992. From the definition, you can't make out exactly what do they do. So in general terms, depository means in the depository system, transaction in securities are done entirely on paperless or electronic basis. As you know, it is like a account, but instead of account of cash or money, it's an account of securities. So this is quite similar to banking system when one opens an account with a bank. So in case of depository system, An investor willing to invest in the security market opens an account which is called a demat account with the depository. When you want to open a when you want to trade in investments shares, the first thing you have to do is to open a demat account through a depository participant who is an agent of depository. Okay, you don't directly go to a depository, you go to a depository participant who is authorized by the depository to accept your demat application form, and through them you apply to the depository and you open a demat account. Then what happens when you open this demat account? Whenever securities are allotted to a particular investor, the account will be credited. So you will find that these securities have come in your demat account. And whenever any securities are sold by that particular investor, his demat account will be debited by the amount of shares sold by him. As simple as this. A depository also acts as a securities bank where dematerialized securities in electronic mode are kept in safe custody. That is a benefit of depository. Now this question was asked in old SFM syllabus. You will also be asked, what are the benefits of depository system? We will divide that under three headings: benefit to investor, benefit to the company, and benefit to the capital market. Okay. So if they ask you benefit to the investor, then you have to write following are the benefits of depository to the investor. It eliminates bad deliveries of securities. There is no physical transfer of share certificate now. The question of anything going wrong is not possible. Everything is electronically monitored, controlled. Okay. Settlement cycle has become quicker now. It is written in your notes T+1, but actually it is T+2. So in 2 days, the security will get transferred to your bank demat account, and money will be transferred to your bank account. Why this depository has helped the investor? Immediate transfer and registration of securities are possible now. If you compare it with the old system of physical share certificate, it used to take many days, not just days, weeks, or even month also. Is it right? For the whole transaction to be completed. At the back of that share certificate, you have to sign, put a stamp, then it goes to company's registrar's office. There they will do all that verification. Again, they will do the necessary secretarial work and transfer the certificate back to the buyer. So that was taking a lot of time. But now in 2 days, it is done because it's all electronic, no movement of securities in physical form, and then it eliminates the risk present in the physical certificate. What is that risk? Forgery. People can forge your signature and get it transferred. Okay. Delays, which was common because it was all dependent on courier company and post office. Mutilation, it can get damaged. Theft also. Damage to share certificate. Suppose there is a rain and your share certificate was lying in that rain, it will also have a nice bath. Okay. But then again, you have to get a new certificate that will cost you a lot. They will charge you fees for issuing a new share certificate. All these are not required anymore. Okay. Electronic transfer of securities enable the investor to get dividend, bonus share and right share quickly also. So if you have a demat account and if you have a bank account linked to that demat account, nowadays the moment the company pays dividend, it gets transferred to your bank account. And one of the reasons it is so fast is because of demat also. Earlier what used to happen, it happens now also. Those who don't have the bank account information with the company, they will send you a dividend check where your name is written, your bank account is written, and then you have to physically go and deposit that dividend check, just like you deposit your articles stipend check. No, online. Wow, your office has improved. But I was given check by one boss, but later on my article stipend was also transferred in another firm. Two firms I have worked with. And then similarly bonus share. You don't have to do anything. Automatically the bonus share comes to your demat account if the company has issued bonus share. Or if the company is going to issue right share also, even that gets transferred to your account first. Of course, here you have to make the payment. Without payment, it won't get transferred. What about the transaction cost? Investors have benefited tremendously here. Transfer of securities in electronic form is exempt from stamp duty. Because earlier, as I said, behind that share certificate, there was a stamp duty, stamp ticket you have to affix. Depending upon the value of transfer, you have to put. Then not only that, that courier charges, postal charges, administration charges, all these have got eliminated. It's a paperless trading, no share certificate, no share transfer deed is required. And lastly, the rate of interest on loan against the placed demat shares are lower in comparison to the physical share. Loan against share. If the loan is taken against shares in demat form, the interest rate is low. Okay, because again the banks are little more safer in that option. What is the benefit to the company? Has the companies benefited from depository system? Yes. How? It helps a company to maintain and update its shareholding pattern periodically. Now, company on a daily basis, routine basis, they can understand the shareholding pattern. That means if some group of people are trying to increase their stake in the company, they will get to know about it very soon. And accordingly, they will take the respective strategies to defend themselves. Is it right? Because on daily basis, the shareholders list gets updated now. So they're able to keep a track on the shareholding pattern. The company has knowledge of beneficial ownership and their holdings at all times. So that if there is a hostile takeover possibility, you can take preventive action on time. Lower cost of issue. Again, the cost etc. has gone down drastically. Because earlier the company had to send physical share certificate to every shareholder. Not only the printing cost of that share certificate, but that courier charges, postal expenses, okay, administration expenses was very high. All that has become zero almost now. Not zero, but very close. Negligible compared to what it will cost you if you send physical share certificate. Large number of transactions can be settled promptly. Imagine if you receive every day lakhs of share certificate and you have to transfer them in the name of another person. How much time consuming? Reliance Industries Limited have around 25 lakh different shareholders. How much would be the size of their secretarial department? Okay. But now all of these people will become jobless. You'll be given different work. Yes. So that is the benefit of technology here. Then large number of transactions can be settled promptly. Distribution of dividend has become very easy now. No need to send the dividend warrant. Okay. Sometimes dividend warrant is 2 rupees and that later an envelope cost you more than that. So I had purchased only one share of Reliance long back, just to get their balance sheet in physical form. Okay. And once they gave me 1 rupee dividend, but that was through dividend check. and the dividend check envelope had a stamp of 4 rupees. And I never deposited that also, because my cost of depositing is more than 1 rupee. So that all problem has been eliminated. Now even 1 rupee dividend comes to my bank account directly. And issuance of right share, bonus share will be quicker, as the ownership can be easily identified. The transfer process under depository system is quick and without any defect also. So all those administrative hassles have been eliminated. Mistakes cannot take place unless your software itself is wrong, but that is not possible. There is a testing of software. Okay. Complaint against the company by investor has been drastically reduced in this respect. That is a big headache for the organization. Many people say, I have sent my share certificate, you have not yet transferred. They shout at the company secretary on the phone, okay? Or they write long, lengthy, abusive letters to the company's management. Even in the AGM, they used to shout at the top management people, okay? That it is more than 6 months, where is my share certificate? Now those questions have been eliminated. Now more concept-based queries will come on the AGM rather than these all administrative queries. How is capital market benefited? Has it helped in development and growth of the capital market also? Yes, capital market has become more transparent now, as trading, clearing, settlement are automatic and always interlinked with the depository. So the chances of manipulation at trading settlement stage is negligible, not there. Use of technology has made capital market activities more efficient now. Investors have more confidence in the capital market. With DMAT, more and more people are entering into this capital market because he knows that my DMAT account will be credited in 2 days, my bank account will be credited in 2 days. Earlier they were always worried. So earlier many retail investors were shying away from the capital market. But this DMAT has brought a lot of people in the share market. And even the foreign institutional investors are coming into India in big way since the DMAT or depository system started. Use of electronic system has made Indian capital market more flourishing. For instance, we can take the example of mutual funds, which have increased substantially in the last few years. So mutual fund market in the last 10 to 15 years has grown leaps and bounds. Many mutual fund houses are now handling funds of more than 5 lakh or 8 lakh crores of rupees. And there are around 43 mutual fund houses in India. Is it right? And that is because of electronic system. Your mutual fund units you can buy, sell just at the click of a button now. Okay, you don't have to go anywhere. If you want redemption, you can sit at your home, do it. If you want to buy, you can sit at your home and do it. And that is because of electronic system. Otherwise, earlier you have to fill that application form, go to the office of the mutual fund, deposit your check physically there, and then after few days the units will be allotted to you. Now the units are allotted to you on the next day itself. Is it right? Now for quickly, those who want to learn the process of depository system, how this depository works, 4 parties are involved. 1, you, the customer. Then between customer and depository, there is a depository participant. And then there is a share registrar and transfer agent for keeping a record of the stakeholders, shareholders. The process of depository system and the involvement of the 4 parties as mentioned above are discussed as below. So what you will have to do, those who don't do trading, you don't do trading, you have a demat account for you. First, open an account. You have opened a Demat account. Normal bank account is required, of course, because that requires money, but you need to open a Demat account also. So an investor who wishes to avail the depository services has to apply for opening an account with a depository through a depository participant. So depository participants can be either a custodian. There are many banks in India which are providing depository participant service like HDFC Security, ICICIdirect.com, or it can be a broker like Motilal Oswal, Sher Khan, okay, and so many. Or some individual brokers can also act as a depository participant. After opening an account, the investor is allotted a client account number. Okay, and then every time you have to get any information or do any transaction, you have to inform this client account number. The holder of a Demat account is called a beneficial owner. So you are the beneficial owner of all the securities in that Demat form. He has the option of opening more than one Demat account. You can open more than one Demat account, either with the same depository participant or multiple depository participant. It's not like a PAN account that you have to only have one PAN. It's not like Aadhaar that you have to have only one Aadhaar. Multiple Demat account can be opened with the same depository participant or different depository participant. So many people do that for some convenience reason, or they want to show small income in each account. If you show large income in one account only, then automatically you'll get a notice from the department, because they have the software. If in any particular account the transaction is more than a certain amount, then you get the notice. But nowadays they track through your PAN. If you have PAN in all the accounts same, they will treat it as one for your income verification. So you are smart, income tax department is smarter. Huh? Businessman has to be smart, yeah. How to convert physical shares into electronic one? Very important topic in today's time, because SEBI has said you cannot transact in shares now. You cannot transact in shares now of a listed company unless it is in electronic form. Okay, that means you cannot transfer it to anybody else now. First you have to get it converted into Demat form. So how to convert? Suppose you are holding physical share. Many people still may have some physical shares with them of earlier time. So these are the 5 steps you will follow. First step is, in order to convert physical share into electronic one, this process is called dematerialization. What is that process known as? Converting physical form into electronic form. Dematerialization. You are removing the material, you are removing the physical element. So dematerialization. So first you have to go to your depository. In order to convert physical share into electronic, an investor has to make an application to depository, and that form is called dematerialization request form, DRF. A small form, it won't ask too much of detail. And once you complete that form filling, that DP forwards the form, that means depository participant, within 7 days to the issuer company or its registrar and share transfer agent. So that dematerialization request form will be sent by your DP to the company's office. Okay, and companies still have those share transfer agents, because there will be still some people who want to convert into Demat form, but their volume is much lower now. Then the company or its registrar then verifies the validity of the security certificate, of course. Otherwise, anybody will get the share transferred in his name. So first they will check validity, authenticity, and the fact that the person making an application is actually a registered member. So once they check your credentials, you are a genuine person, then after verification, the issuer company or its RTA, registrar and transfer agent, on being satisfied, authorizes an electronic credit of security in favor of the investor. So they will issue you one advice to the depository. Okay. And once the depository receives that information or that advice from this RTA, the depository also credits the demat account of the investor. So now the securities will be reflected in your demat account. So this is called dematerialization. Slowly and slowly this concept will become outdated, because in future you have to trade in demat form only. Is it right? But yes, it is still relevant, because there are still a lot of promoters who are holding securities in physical form. Earlier they could transfer it, but not through the stock exchange. But recently SEBI said any transfer will have to be through demat form now. And suppose an unlisted company gets itself listed on the stock exchange, then also this problem of converting physical share certificate into demat form will be there. Now reverse working is also allowed. Can you convert your demat shares into physical shares? Allowed, but be careful. You will not be able to transfer it. You will not be able to transfer it. If it is a listed company, you are not allowed to transfer it. Only in the demat form you are allowed to transfer. So there are 4 steps involved here. First step is, an investor having a demat account can apply for withdrawal of balance in his account in a rematerialization request form. So which form you have to fill and submit? RRF, rematerialization. Rematerialization means converting electronic into physical form. Step 2, on the receipt of rematerialization request form, if the DP is satisfied that there is a sufficient balance, will block the balance of the investor to the extent of rematerialization quantity and electronically forward the request to the depository. So this depository participant will check the balance in your demat account. Suppose you want to rematerialize only 100 shares out of 200. So they will send the request for 100 shares only. So depository will now receive your request. The depository will then block the balance of the investor to the extent of rematerialization quantity, means now it cannot be traded, and forward the accepted rematerialization application to the issuer or its registrar and transfer agent. So company will be informed, and then who will issue the physical share certificate? Company. Company means whatever company's agent. RTA will confirm that RRF has been accepted. When the depository gives that RRF form to the company's RTA, the RTA, after receiving that form, will dispatch the physical share certificate in how many days? 1 month, 30 days. So you should be careful when you do this process, because then you can't transact in those shares. Your share will become illiquid. Okay. Next few simple lines. The topic right now is going the process of depository system. We have learned how to open an account, how to demat, how to remat. And now next is distribution of dividend. If you have a demat account, and if you have given the bank account details to your depository, then the amount is directly transferred to the bank account of the shareholder. Is it right? So a company or its RTA generally informs the depository of various dates, such as book closure, redemption, or maturity of security. In case of company, for every transaction there are something called closure date or record date, and on the record date whoever is the shareholder or the member or the debenture holder, he is only entitled to either dividend or interest or bonus share or right share or any such benefit. So who will decide the list of the shareholder or debenture holders? The depository. It enables the depository to electronically provide to the company a list of holding of the investors on the day of distribution of dividend, because they have the securities with them for all the shareholders, and once this list is received, then such shareholders are paid dividend. Okay, so this is another advantage of depository. Next is closing an account. Do you want to close your account? You can. If an investor wants to close his account, he will make an application in the prescribed format to the depository participant. So there are forms also. For opening, there are forms for closing. Is it right? Why you want to close? You don't want to trade in the share market. You want to sell all the share and go to Goa and enjoy the rest of your life. Many times we change our DP also. Not that WhatsApp wala DP. Depository participant. Sometimes we change our DP also. Okay. And in that case, you have to close, you may close the previous DP. The DP may close its account if there are no balance in the investor's demat account. Then it is easy. But if there is a balance, he cannot close. Then either you have to rematerialize or transfer his security to some other depository participant, okay, or with a different depository, or to some other account either with the same depository participant or with a different depository participant. So there are forms for this also. If you want to close, there is a form. If you want to transfer to another depository participant or another account, there are forms. You fill that form and then the process takes, I think, 7-8 days and it is done. So if you have shares in one demat account, it gets transferred to other demat accounts. Okay. Recently I did that, so I know. Yes, but I will not tell you more details. Next is stock and commodity exchange. For teaching many things in finance, first what I do that thing in the stock market, okay? So that I will have some idea how it is done. So to teach this chapter, first I had to do lot of practical thing in demat, okay? Open, close, multiple account, shift from one account to another. Then I traded also in few shares, derivative. Little understanding is possible. Similarly, when I was teaching mutual fund for the first time, I invested in many different types of scheme to see how they actually work. Okay. Although small amount, but then you get an idea. And then it becomes easy for understanding. Now, good news for you. Stock and commodity exchanges. So I give you a choice. You want me to explain in detail or briefly? Because even the line is same what we have done in the previous chapter. Institute have copied, pasted line by line, no change. Yes, even the story is same. So we'll do little fast, okay? Omit. If I omit, then some people who will purchase the pen drive will ask for refund also. Okay? You don't know how much harassment we have to undergo. We'll just take, say, 5 minutes at the most. No, 5 minutes, so that everybody is satisfied. The stock exchanges we'll discuss under two headings: Indian Stock Exchange and other global stock exchanges. And before that, there are 1 or 2 paragraphs which gives you a background of stock exchange, which you already know. It is a secondary market to facilitate mobilization of resources by the company. Okay. And security market world over is highly regulated because they protect the interest of the investor and at the same time overall development of the security market. In India also there are 3 or 4 strict regulations. One is long back Security Contract Regulation Act 1956, followed by Security Contract Regulation Rules 1957, and then the boss SEBI is already there, okay, for ensuring the overall development of the security market and prevention of any fraud or scams and overall benefit to the investors. What is the meaning of stock exchange as per SCRA 1956? It is an association, organization or body of individual, whether incorporated or not. But now all stock exchanges have to be incorporated. Demutualization of stock exchange have taken place. Established for the purpose of assisting, regulating and controlling business in buying, selling and dealing in securities. So that is the meaning of stock exchange. Main purpose is assisting, regulating and controlling the business of buying, selling and dealing in securities. Look at the power given stock exchanges in India to make and enforce bylaws under the Act, and rules reveal that Indian stock exchange have been envisaged as self-regulatory organizations. As you have learnt earlier also, stock exchange can make their own rules, and those who want to trade in that stock exchange will have to follow the rules of that stock exchange, and that is why they are called self-regulatory organization. They have been given powers to frame rules for their working. Now, what is the history of stock exchanges in India? This paragraph, you will remember, is just copied and pasted as it is from previous chapters. The history of stock exchange in India goes back to 18th century when securities of East India Company was transacted. There were 50 to 60 brokers led by legendary, do you remember this name? Prem Chand Roy Chand. Chand Hi Chand. They formed the backbone of share flotation by East India Company and a few commercial banks. Corporate shares made their entry in 1830s and assumed significance with the enactment of Companies Act in 1850s. The BSE, the oldest stock exchange in India, was established in 1875. Underline which name? Share and Stock Broker Association. Actually, it was Native Share and Stock Broker Association. So that mistake was there in that chapter also, here also. It is just a copy paste they have done. Rectified later also. Here also, there also. The stock exchanges are tightly regulated as self-regulatory organization under the Act. In addition to the ordinary regulatory power over the stock exchange, central government and or SEBI may nominate up to 3 members. Is it 3 members? To the board of each stock exchange. Section 242 Roman 3 of Security Contract Regulation Act 1956 and Section 10 of SCR Rules 1957. Who will remember so much? Copy. Okay. Open book. The government and or agency have the authority to make, approve and amend. Make, approve, amend the bylaws of the stock exchange. That means stock exchange just can't write anything in their bylaws. They have to get the approval from the government or SEBI. Again, some section number is written, read as homework. In return, the stock exchanges have been granted a strong disciplinary authority over their member stockbroker. So the member stockbroker will have to follow the rules and regulations framed by stock exchange. Leading stock exchanges in India. The 2 main stock exchanges in India are BSE and NSE. Okay. First, few important information about BSE. It is the oldest stock exchange in Asia and was established as, now they have corrected, Native Share and Stock Broker Association in 1875. And it is the first stock exchange in the country to obtain permanent recognition in 1956 from the Government of India under the Security Contract Regulation Act 1956. This exchange's pivotal and preeminent role in the development of Indian capital market is widely recognized. Okay, Sensex is very popular among the investors, and its Sensex is tracked worldwide. That means if you want to know how the Indian market has performed today, which index normally they refer? Sensex. Even Nifty, but Sensex is more popular. It has that advantage of first mover. Okay. Every day I also see Sensex, even though I don't have too much serious interest in that, but as a habit. Okay. And once you also start investing in share market, which you should do now, you will also have an interest in the daily movement of Sensex. Okay. You must be having, you are a share broker. Earlier, an association of person. What was the original legal format of this stock exchange? AOP. But now what is the current format? Company. It is incorporated under Companies Act 1956 pursuant to BSc Corporatization and Demutualization Scheme 2005 notified by the SEBI, and that is why the name at the top is Bombay Stock Exchange Limited, and now it is also a listed company. You can trade in their share also. The brand value was so much that even though we have changed everything from Bombay to Mumbai, the Bombay Stock Exchange still remains Bombay Stock Exchange because it has a huge brand value factor. Okay, you can't change the brand. So a lot of debate, discussion, political hue and cry have taken place over the name of this Bombay Stock Exchange, but that is long back. The system and process of exchange are designed to safeguard market integrity and enhance transparency in operation. Now it is very sophisticated. That means the chances of any fraud, scam, manipulation is almost negligible. Although we will do it, but at least from their side they have made it very safe. The exchange provides an efficient and transparent market for trading in equity, debt and other derivatives. So nowadays if you go to their website, any information that you want about a listed company, any information, it's almost available. Okay, that means you can, from the day the company started trading till today, what was the share price, grow, high, low, management, product, annual report, okay, competitors, business risk, financial risk, all those information about the companies are available to you. After knowing that, it is up to you to decide whether to buy or not. And their system through which this trading takes place is called BOLT, BSc Online Trading System, BOLT. Not Usain Bolt, Nalak. It is India's BOLT. Is a proprietary system of exchange. They have designed it, and now it is having a certification also called BS 7799222002 certification. So this is a sign of quality. Okay. And the surveillance and clearing and settlement function of exchange are also ISO 9001 and 2000 certified. So they have received a lot of accreditation, certification in terms of quality. But after the introduction of National Stock Exchange, BSC is a tough competitor now. Okay. And these two exchanges have almost led to closure of all other exchanges also. So when was NSE established? 1992. Okay, and it was established as a tax-paying company, unlike other stock exchanges in the country. When it was recognized April 1993 under SCRA. So different dates will keep in mind. Incorporated in 1992. Recognized by SCRA in April 93. Operation in debt market, wholesale debt market in June 1994. And operations in equity segment November 1994. And operation in derivative segment after a few years, June 2000. Okay. So if they ask you, arrange the following events in ascending order. First, incorporation in 1992. Recognition by SCRA in April 93. Trading in wholesale debt segment started in November. June 94. June. Then equity segment November 94 and derivative segment June 2000. Okay. This way the question can be asked, where again only if you have read it properly you will be able to write. Open book exam will not help you with such questions. And then it uses satellite communication technology to energize participation from around 320 cities spread all over the country. NSC can handle 6 million trades per day. 60 lakh trades they handle per day. Again, these are all statistics which keep changing. So you have to keep in mind the latest statistics before you go to the exam, because it might be much more than 6 million now. And NSC is one of the largest interactive VSAT based stock exchange in the world, VSAT. So it uses that VSAT technology and it supports more than 3000 VSAT. What is the full form of VSAT? Very small aperture terminal or something. Is it right? VSAT. Don't bother. They are not going to ask you. VSAT, have you heard? And that is because India has made a lot of progress in the satellite technology in the last few decades. Do you know that? And it is one of the best in that field now. A lot of money has been invested in satellite technology, and that is why this stock exchange have benefited, because they are using that technology and transferring the information. In fact, many coaching classes used to use this VSAT technology. Is it right? That means live telecast, and that is happening because of VSAT. So first the matter or data goes to that satellite, and from satellite they are transmitted to different centers. That is VSAT. And in VSAT also there are several technologies. They are using that largest private wide area network in the country and the first extended C-band VSAT network in the world. This is again a very high advanced technology, C-band VSAT. If you want to learn more, you can do some research on that, but not required now. Currently, more than 9,000 users are trading on the real-time online NSE application. Again, I think this number must have grown much more than 9,000 users now. And there are over 15 large computer systems, which include non-stop fault-tolerant computers and high-end Unix servers operational under one roof to support the NSE application. Entire thing has been copied, pasted from the other chapter. So when you are revising before the exam, then don't read again and again same thing. This coupled with the nationwide VSAT network makes NSE the largest information technology user. Now stock exchange abroad. For the third time. Yes or no? So I will just quickly again go through it fast. NYSE was established more than 200 years ago in 1792. NSE is the world's foremost security marketplace. It is very big, very respected. Okay, companies feel proud when they list on NYSE. Each day on NYSE trading floor an auction takes place. Open bid, and they have still maintained the convention of that open cry system, but I think slowly they have moved out of that, but still maybe some portion is still there. Open bid and offers are managed on the trading floor by exchange members acting on behalf of institution and individual investor. So the brokers will assemble there on behalf of their client, they will do the trading, buying and selling. Buy and sell orders for each listed securities meet directly on the trading floor in assigned locations. Prices are determined through demand and supply. Stocks buy and sell orders. So all orders they will collect, funnel through a single location, ensuring that the investor, no matter how big or small, is exposed to a wide range of buyers and sellers. So all demands, all supplies will be accumulated and then the orders matching is done. So that is in brief New York Stock Exchange. I have already edited it to a large extent. Okay. Now NASDAQ. NASDAQ is known for its growth, liquidity, depth of market and the world's most forward-looking technologies. All these make NASDAQ choice of the leading companies worldwide. This type of companies are mostly listed on NASDAQ. Blue chip companies and technology based companies. Mostly technology based. So all this Amazon, Apple, Microsoft. Okay. Since its inception in 1971, it's not a very old one compared to NYSE or BSE. NASDAQ has steadily outpaced the other major markets to become the fastest growing stock market in the US because they have very advanced technology. NASDAQ is screen based, means computer, operating in an efficient, highly competitive electronic trading environment. As the market for NASDAQ's largest and most actively traded security, NASDAQ today lists more than 4,000 securities. So what you do one homework check now, what is the number of shares, because I think it must have crossed not 8,000 but around 5, I think, because the institute data is not very much updated. Okay. To be listed on the national market, a company must satisfy. Getting listed on NASDAQ is not easy. They have a tough regulation. You have to comply with stringent financial regulation. Means your books of accounts should be either US GAAP or IFRS compliant, audited by a CPA. Then you should have a minimum market capitalization. And then you should have a very high standard of corporate governance. Then you are allowed. NASDAQ national market companies include some of the largest best known companies in the world. So all top blue chip companies across the globe are listed on NASDAQ. In contrast to trading floor based stock market, what is traditional floor based stock market? Again that open cry system, which is NYSE. NASDAQ has no single specialist through which transaction pass. So it's a screen based trading. You look at the order on the screen, you buy and sell. So NASDAQ market structure allows multiple market participants to trade through a sophisticated computer network linking buyers and sellers from around the world. So there is no particular physical place as such. Lakhs of people can transact at the same point of time irrespective of where you are located in the world. That is their system. It's very advanced. Together these participants help ensure transparency and liquidity for a company stock while maintaining an orderly market and functioning under tight regulatory controls. So regulatory control is also there, but efficiency, technology, everything is there in NASDAQ. Now we'll come to London Stock Exchange. Third time they have repeated the same information. Its history goes back to 1760 when 150 brokers were, remember, kicked out of that Royal Exchange for rowdiness. formed a club at Jonathan's Coffee House to buy and sell share. Then in 1773, members voted to change the name to Stock Exchange, and 2000 shareholders voted it to become a public limited company, and thus London Stock Exchange PLC was formed. And dealing in share is conducted via an offline trading facility which is operated by this Cazenove and company. Same paragraph we have learnt earlier also. Even the next 4 paragraphs are same. London Stock Exchange provides a range of services for companies and investors. We have discussed it, so I am going a little fast. Third time, imagine my situation. Company service. What service they render to companies? It provides a number of markets which allow companies large and small to raise capital. That is the benefit, and a range of services to increase the profile of company. Second service is trading service. It gives market user access to a well-developed trading environment with a proven record of stability and flexibility. Third is information service. It provides high quality real-time price information. If you want to know any information, you can get it on their website. Okay. And supporting these activities, the exchange regulates the markets to give protection to investor and companies and to maintain its reputation for high standard and integrity. So they regulate the market also very efficiently, because the idea is that more and more participation should be there. People will come to a market only if the market is efficient and integrity is there. The last point, in addition, in partnership with others, it helps to track the performance of market through various indices also. So they have a lot of sectoral indices. If you want to know the performance of this segment or this segment, there are indices for each of them. Like in India also, we have got index for information technology company or banks, PSUs, pharma, infrastructure, so that for a particular sector also you can track how they are doing. Characteristics of stock exchanges in India. Traditionally, a stock exchange has been an association of individual members. Originally started with AOP format, and the members were called member brokers or simply members or brokers, formed for the express purpose of regulating and facilitating the buying and selling of security by public and institutions at large. So first some members came together, formed an association, but then in 1956 the stock exchange got recognition under the law. The first stock exchange to get recognition was BSE. Okay. Corporate membership of stock exchange has also been introduced recently. Presently there are only 6 stock exchanges in India, and out of that also only 2 are the national level stock exchange. The biggest stock exchange is now NSE, and after that you have BSE. So there are now 2 main stock exchanges in India. A stock exchange is typically governed by a board, because now they have a corporate structure. Board consisting of board of directors. In the earlier discussion, we have seen some members are nominated by government or SEBI. How many maximum? 3. 3 in each stock exchange. NSE is biggest. Volume wise BSE is more. I think so. Okay, we'll check, and then tomorrow you check and come. You can check on internet. A stock exchange is typically governed by a board, that I have told you. Now government nominee will come from which area? Ministry of Finance, as well as some public representatives who are expected to safeguard the interest of investors in the functioning of the exchange. So government appoints 3 nominees on the higher side. Basically, the intention is to protect the interest of public, and the board is headed by a president who is an elected member. Out of all the members, he is one of them, usually nominated by the government from among the elected members only. The executive director, who is appointed by stock exchange with government approval, is the operational chief of the stock exchange. So there is a board of director, president, and executive director. And then what this executive director does, day-to-day operations of the stock exchanges are carried out in accordance with the rules and regulation governing its functioning. We have actually covered this everything in one earlier chapter. SEBI has been set up in Mumbai to oversee the orderly development of stock exchange. Those companies which want to raise money through public have to get themselves listed on at least one stock exchange. All ordinary share, preference share and debentures of publicly held companies are listed in one or more exchanges. Is it right? Stock exchanges also facilitate trading in the security of the public sector companies as well as government securities. So it is a secondary market, and it provides a platform where the securities of private companies, public companies, government bonds, preference share, debentures can be traded. Now we will continue tomorrow. Function of stock exchange we will discuss tomorrow. I think this we have discussed in previous chapter also. Yes or no? But again we'll take it little fast.